Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. Now today is a very exciting day for us. Now if you recall, if you have been watching us for the last 2 weeks, we've actually been looking at the macroeconomic outlook. We've spoken to different analysts, different investment houses, even banks as well, to get a sense of what do they expect for the year 2020. What have we had so far? Cautiously optimistic is the keyword that you're looking out for. What does that mean? We've had ranges of 5.7% to 5.9% growth with regards to GDP. The other key thing that we have had is government expenditure needs to come down, but it might not come down this year. What that means for you as an individual is expect slightly higher taxes. In other words, your consumption expenditure on a month-to-month basis could be slightly higher because you may have to be forced to pay for additional taxes to meet the government deficit. Now today we are looking at your individual investment strategy. So what does all of this mean for you? If you're going to be paying more in taxes, number one, do you have extra money to save and to be able to invest? And if you're going to invest, where should you put your money? And if you're going to put your money in any particular asset class, when we focus on the NSE, how should you then strategize on what your winning streak could possibly look like? In studio, we are joined by Mr. Robert Yawe. He's a financial coach. Welcome to the show, Robert.
Thank you.
What are your sentiments about the year? That's the question I'm asking everybody for the last 2 weeks.
The year has kicked off well, I would
Yes.
say. I think we're seeing a little bit of vibrancy in the economy, but then also the political temperature seems to be rising.
Okay.
So the question becomes, will we be able to sustain a parallel system whereby the economy remains vibrant, independent of whatever happens politically?
All right, that's an interesting way to start this conversation. We've had some of the economic houses come and tell us that they expect 5.7 to 5.9% growth with regards to GDP. Do you have a sense on how the year is going to pan out, at least when you're speaking to your clients, because you are a financial coach? What are you telling them and what sentiments are you getting?
What I'm getting is a sense of positivity,
Okay.
which was lacking a bit last year.
All right, that's a good point.
A lot of our corporate clients seem to be saying it's time to kick off.
Okay.
Yes, they're not holding back.
They're not
Last
holding
year
back.
there was a bit of holdback. People are being a bit conservative. And I think, let's wait and see. I think that's more important is how positive people are thinking of it. Then for me, the GDP contribution looks at very high revenue organizations. But for the person down here, they do make higher returns.
They do.
Yes.
Okay, so I like the fact that it's positive, it's all gears go, let's kickstart. What does that mean? Does that mean that people are beginning to make more investments in terms of enhancing their capacity? Does that mean that people want to spend more? Or does that mean that suppliers are seeing opportunities to be able to sell additional goods and or services?
More of it is that people are willing to spend.
Okay.
There was a tendency for people to hold last year. People are not spending.
Okay.
And I think that's what created this slump in the economy. Let's hope that the rate cap doesn't become a dampener.
Okay, that's
so
true.
we hope that the banks don't start shooting up
Let's say,
interest rate. And
yes.
so far we've seen a very interesting response of the banks. We've seen a 1 to 1.5% drops in interest payable.
That's true.
Yes, but with an interesting twist where they ask you to retain your repayment.
Exactly. So then.
So to me, I think that what that does is means people will get more equity into their real estate, the ones who have houses and the rest, if they maintain that at a lower interest rate, which means they should be able to come out of their mortgages
sooner rather
than later.
Okay.
And hopefully that should have a direct impact also on the people who are doing income real estate.
Okay.
They should be able to hold rents constant.
Okay.
And if they do that, then we should see a drop in vacancies.
But interestingly, Robert, like the banks have decided to actually lower the rates for existing facilities.
Yes.
Yesterday, we did have an economist in our studio, and they did allude to the fact that for new facilities, it's going to be a very different scenario. So you may not necessarily be getting a new facility if you walk into the bank at the current prices that we're getting now. As you said, it could be slightly higher. So that's probably something that could happen. But before I go to the next session of the next segment of our question and answer session today, you brought out a very interesting point. There's a lot of money that's circulating and people are willing to spend. Yeah. Where is this money coming from and why was it not there last year?
As you know, Kenya is a very interesting country.
Yes,
and one thing we've never been able to keep tabs on is what our cash economy looks like.
Okay.
Things like mobile money has helped us to see a bit of visibility on it. But as yet, even the World Bank will tell you they don't really know how much circulates in our cash economy.
Okay.
Yes, but what it is the positivity of people says that you go out and you find there are shops that were seeing slow stock movement.
Yes.
But they're now seeing an increase.
It's slightly higher.
Slightly higher.
In as much as we are going through the January effect.
Even with the January effect.
Even with the January effect.
I suspect we have become more resilient and become more planned.
Okay.
We're no longer getting hit with crisis.
That's true. And again, if you look at it, I mean, 2019 was not a very good year for most individuals and businesses as well as corporates. So I think we're coming off a low base, so to speak. So anything is better than 2019 if you use 2019 as a reference year. But if you use 2018 as a reference year, then maybe not. But 2019 as a reference base is an interesting one. Okay, now I want us to look at the NSC and what happened last year.
Yes.
But let me just paint a picture, Robert. The conversation we're having today is there could be an incidence of additional taxes, unpredictable taxes for the consumer, largely because the government has a deficit that it needs to meet. When I look at that statement, I interpret it as Mbithe to say, I might go to the supermarket, what my 1,000 was buying for me last year may not necessarily give me the same basket of goods this year. So then if that's the case, how do I as Mbithe then, do I have the wherewithal to put money aside to save, even before I can start thinking about investments in that kind of environment?
I think first what we need to do is to appreciate that whoever is responsible for monetary policy are intelligent enough.
Yes.
To understand that you can only tax so far.
Okay.
Kenya's biggest problem has been that we have too few people who are being taxed.
Exactly.
And maybe what we need is, and I think which is what Kenya Revenue Authority are looking at, is to broaden the tax base. And if they do that, then there will be no need for an increase in tax rates.
Okay.
So for me, I think is that let's hope that KRA will polish their pencils, sharpen their pencils, and try and get more people into the tax bracket.
As opposed to already taxing the people who are already being taxed.
Who are already being taxed. Because I think already that base is already shrinking, because most of our larger corporates have laid off over the years.
Exactly.
So which means that depending on income tax from the salaried individual only will not add much value, because it's already scaled down.
Okay.
There's been a huge number of layoffs at the top end of the corporate ladders.
Yes.
So your 45-year-olds, your 50-year-olds, many have gone home. So the question now will be, will they go out and invest seriously?
Okay.
Or will they panic?
Yes.
Yes.
Actually, what do? You have been working for 20, if not 30 years.
30 years, yes.
And then redundancy happens. And the funny thing is, yesterday I was in a social setting, and the majority of the people there were people who are ex-bankers, have been bankers all their lives,
Yes.
15 years, 20 years. And then now they're in a space where they are redundant, and you can overhear them speaking about their businesses that they need to do, but then they don't have the business acumen. They are fantastic employees.
Yes.
Are these people then possible of people, I mean, do they qualify to be entrepreneurs? Or really, what should their considerations be in terms of investments and making money?
That's very interesting, because we had this conversation 2-3 weeks ago.
Okay.
And what has become clear is the startup space and the SME space has been lacking one thing, and that's what we call seasoned management skills.
Okay.
So for me, what I'll tell a lot of those people who've been in the banking sector, who've been in manufacturing and the rest, and I've been there 30 years, what they really hold more of is the skill they carry.
Yes.
They need to start thinking about scaling down, one, the expenditure.
Yes.
Then pick a small company to work for, because you're not going to replace your previous salary.
Okay.
The only person who can pay you what you were earning when you were employed before is the same person who laid you off.
Yes.
And that tells you have become too expensive.
So you just need to adjust.
Adjust and accept.
Very fast and move along swiftly.
But out there we have a lot of SMEs who are ready to move to the next level. And what they are lacking is those skills.
Okay.
So if those people could start looking at those smaller companies, go in either just as an employee or a consultant, or both an investor and an employee.
An investor. So that's another investment class. So
Yes.
you can, SMEs, if they're open to it.
They're very open, and I think you're looking more of it. It's more, now we need to get our own Kenyan version of a PE.
Yes.
Yes.
Then we have Robert Yawe who's running it.
Yes.
Because the thing is, it's very easy to see the upside when I put my money in your business. But what always happens, kulipa ni matanga, you know, like getting your money out. Like they say, this is Africa, you can never get your money out.
You can, and I think maybe that's what we need to become a bit more positive about.
Okay.
Because also the SME you're looking at is not run by our usual high school dropout or somebody who's just been hustling.
Yes.
These are run by people who are laid off a little earlier than you.
Okay. Fantastic.
So in other words, they do understand the need to create structures. The only problem is the resource person to come in and help them run the day-to-day, which means the generating of the cash, and have somebody help them look at strategy and long-term.
Okay.
And with the NSEs, Ibuka, and I think that's why it's a bit slow.
There's no uptake. I mean,
There's no uptake because what you have is that the requirements require that I have put in place certain structures into my business.
but is even the NSC the best way to finance your capital? Robert, we have sat here
Yes.
and talked about NSC, and you have given me statistics. You have told me NSC has 1.4 million accounts.
Yes.
But 140,000 trade. Only 10% of that universe is actively investing. So then, in other words, what you're telling me is we could have all this fancy words to say that you could raise capital on the NSE, but is it even worth anybody's while?
To me, I'm not looking at it to raise capital.
Yes.
I'm looking at it to help you structure your business so that it's ready for investment.
Okay.
And to me, the best person to give you a clean bill of health.
If the NSE says you're good to go.
You're good to go. To me, if you ask me, I'll do that, but not go through the NSE.
Jeez, but
use
then you're
that
just
certificate
abusing
it's
resources.
Well, it's the same thing you do when you get employed the first
Okay.
time. You go and gain working experience. You make all your mistakes with somebody's business.
So you've been an intern. No, it's your first job. It's
It's
nothing
your first
personal.
job. Yes, it's nothing, and that is when you know and you accept that. Fine, you're paying me 20% of market rate,
Yes.
or what I believe is market rate.
Yes.
But for me to acquire the remaining 80%,
I need to.
I need to work with you
For a little while.
For a little while.
Robert, you're extracting too much value rather than appropriating value where it is due.
The NSC is where you go and cash out.
Yes.
And I think most of these companies are not ready to cash out.
Okay.
What they are ready for is pre-IPO type financing.
Yes.
And for them to achieve that, they need to go through a process that cleans them up.
Robert, I know we're sort of going around and talking about different aspects, but you're bringing out very pertinent issues. And the thing that I'm hearing from you is, number one, people need to be able to invest, whether it's in a business or in whichever asset class, because you need that return.
Yes.
And that's the return that helps you consume at least at prior period levels if you are employed, for example. But here's something that I'm bringing out. In regards to mobile banking, for some reason we're able to use the mobile platform to extend credit. Why is it that we cannot use the mobile platform to pull in all these people together in one way or the other and create this Kenyan private equity fund that then disburses money in the same way that Afuliza, Astawika would disburse money in terms of loans to other people?
What the mobile money platforms have done is they've just reinforced our individualistic thinking, because I'm taking a loan as myself, for myself.
Okay.
Now what you're asking for is us to group. For me, it's a mindset issue. And the only way we'll see that is we need case studies of true successes. And that's why I go back again to what I said is, let the SME go through the Ibuka program.
So go through the Ibuka program. Okay.
Get polished up.
Get polished up.
Go out and now borrow via PE.
Yes.
And this could be either small groups, and we have our chamas and the rest, our investment groups.
It's just bringing them together. It's just
We already have the, because I think we're talking of what? We talk
Yes.
of about almost 100 billion
Yes.
sitting in chamas and investment groups and the rest, which is actually sitting idle.
Well,
What
it's
it
not
was-
sitting idle. There's somebody else who's probably earning 4 or 5% and skimming
Yes.
that off 100 billion, which is a
the
lot
lucky
of
ones, but
money.
most of it is sitting on pieces
No, but
of
for
land
the
that are
owners
not.
of the money are not necessarily getting a return
Yes.
from it.
So at the 4%, and what I'm saying is that what you need is to provide that alternative platform for which the NSC is not.
Okay.
But we need to know that the company I'm going to put money into has potential to exit.
Okay.
Yes.
So then what you're saying is I really don't have many options in terms of investments. I really just must focus on what's happening on the NSE. Because that's one forward channel.
What's your risk appetite?
I mean,
again.
Okay, it depends, because we've had many stories, and we've also seen online many stories of somebody who made an investment in A, and then A disappeared with the money, gave it to B, and then A could not have any point of recourse to get it because they went to the judiciary system, and it was just a whole entire mess. So at least if not, in terms of risk and return, for one, the NSE is it's visible. There's a lot more transparency in terms of how you get in and how you get out.
Okay. What I'll say is, again, you need to diversify.
Yes.
So diversification is what? How much are you putting into the NSE? Because that's fairly stable in a way. Then you've got your fixed deposit, which is, you've got treasury bills.
Okay, then how does it translate? So what you're saying, yes, invest in 2019, in 2020. How do you stratify your investment strategy? Do I then quickly go and get into the NSE, or as you mentioned, do I start with a fixed deposit first? Do I start by opening maybe a money market account? At what point should I be looking at the NSE?
Do you want to be active or passive?
Before I can even answer that, I want a return. I
don't
want to lose my money.
Yes, and again the question becomes that: are you passive?
I don't know. Okay, let me put it this way.
Yes.
So 2020, I haven't had a proper financial plan, right?
Okay.
And then the first thing I hear, I'm following Mr. Robert Yawe online, and I'm like, okay, I need a budget. So maybe 2019 was my year.
Yes.
I need a budget, and I need to start saving.
Yeah.
And so I succeeded in, budgeting, saving. I'm not 100%, but I'm certainly not zero. I'm probably 50, 60, 70%. So I figured that out. Then I'm saying in 2020, it's the beginning of the year. I'm drawing out my vision goal, my vision board. And in my vision board, I have one element that says, okay, Mbithe, now you're ready to invest because you have learned how to save, you have learned how to budget. Where am I starting off from?
So we've sorted out that other part.
Yes.
So the first thing would be, I would say, go to something that's fairly stable, treasury bills.
Okay.
Do part of that in treasury bills, because then that amount, you have an assured return.
Yes.
Yeah.
Do I go directly? Do I go through a money market fund? How do
Go
I do
directly.
it? Go directly.
Go directly, because
Okay.
then you're likely to get an additional 1% more than if you go through somebody who
All right. So walk to Central Bank of Kenya.
Yes,
and
open
open
your account.
your account, and it's pretty easy.
Yes.
It's pretty easy. Open your account. Okay. Or even Emma Kiba, that's another option, but
Yes.
it doesn't run all the time. But when it does run,
when they open up,
when
but
they
if
open
you want
up.
continuous, then go open your CDS account with Central Bank.
Okay.
Put in part of your money there. At least that will give you your 8.5, your 9%, your 9.5%.
That's a good return. 8.5,
That's a very good
9.5.
return.
That's a good return
Yes.
in a year. Okay. So then once I figure that out, do I then now decide to look at the NSE?
Then you can look at the NSE. Yes.
Okay, then we can look at the NSE.
Yes.
Okay, now at least we're all on the same page.
Yes.
Now, when we're looking at the NSE, you've given us some very good charts here. When we're looking at the NSE, I want us to look at the performance for 2019. Our charts team can probably put up graphic number 1, because you're showing us the companies that did well and their fundamentals. Maybe you can walk us through these numbers.
What we look at, if we look at the last 6 months.
Okay.
So the last 6 months, 1 month, and 3 months.
Yes.
Scan Group seems to have had one of the highest performance returns.
All right. What return is this for the
They
year?
actually did 56%.
56%. That's a very good return.
Yes.
How would I have known to invest in Scan Group January 2019?
You'd have had to be somebody who regularly monitors what's going on.
Okay.
And we all know 90% of us are not able to do that.
But where are my sources? Is it the newspapers? Do I call you and speak to you? How do I find out what's going on?
Newspapers and today's online.
Yes.
Basically online you have enough information telling you what's going on, what alerts, what information is coming up.
Okay.
And again, like I say, get back to the My Stocks platform. We do have alerts scrolling at the bottom which tell you what announcements have been made, and then based on that you can look at what effect it has.
Okay.
But for the person you're saying who is starting to get in, for me I'm thinking look at an index pegged fund.
Okay.
Yes.
Such as?
The NYSE.
Okay.
Yes.
But if I'm starting in Kenya,
It's Kenya who have the stock market now. We have the New York
we have the New York
Stock Exchange NSE
NSE index.
15 index.
So then I look at the constituents.
The constituents of that.
Okay.
And
then pick it from
just
there.
pick it from there and just follow it.
Okay, so for one, now you're saying Scan Group, that was 57%
Yes.
last year, and you're saying the only way you could have known about this in January last year is by following information.
Yes.
Did you know about it in January last year?
No, January I wouldn't say we would, but mid-year we noticed that yes, there was something happening. I think.
How did you notice? What chart did you look at to notice there was something happening?
It's not usually the chart trend. It follows.
Okay.
It actually lags.
Yes.
Yes. It's the CEO who sold out part
Yes.
again.
Yes.
Which means WPP are more confident
Okay.
in Scan Group.
All right. So you saw the news and you started seeing a
Yes.
bit of market activity.
Activity there.
Okay.
Second, what it is I think it's what we've realized is a lot of investors coming into our market again are still foreign investors.
Foreign investors.
Many
okay.
of us are actually cashing out,
Okay.
which is very risky because in a few years' time we'll all be complaining that all our blue chip companies
We have
are
nothing.
foreign owned.
All right,
Yes.
hold on to that thought. We take a quick break. As always, follow us on Twitter, and that is Metropole TV. Engage with us. Let us know what your thoughts are. See you in a few seconds.